most investors don't have a sound thought process. That's my experience. That's my
Yes.
problem is that it's absolutely fine to say I'm hedging this, I'm hedging that. Absolutely fine. But do you know how to manage that portfolio when there is no need to hedge? When equity is doing well, in Indian equity is doing well, and gold is not doing well, when fixed income India is doing well, will you still be invested with as much enthusiasm in gold, international equity? And do you know how to manage those assets when those assets are not playing the big role that they are supposed to play? That question I have not had answers with conviction from most people. I mean,
Okay.
there's one guy who answered me well, but that guy is actually a fund manager. I mean, you have to. That's an exception, not an example.
Yes, this was my question, that most of the people do not do rebalancing, and reasons that they have is that, I'll have tax implications, and let's say I have to sell equity now, but equity is tanking right now. How do I sell it? That behavioral thing that comes in. So they don't do all those things. That is why maintaining asset allocation is extremely difficult. So would you suggest that somebody just goes with hybrid funds and multi-asset funds, and if they have a fixed asset allocation, they can have similar equity allocation, but for new investment, just go with hybrid, and that takes care of asset allocation for them, no taxable expense for you.
How many of such, let's say we recommend that. How many of such investors will stop with just one fund? Most of them will not. They will see another NFO and say, "Oh, is this better? I will invest there." The, people they are determined to clutter their own portfolios. You cannot stop them. They're just determined. They're heavily determined to clutter their own portfolios. The problem is that if you say I'm going to keep it simple and I want to buy a hybrid fund, but what hybrid fund will I buy? An aggressive hybrid fund is typically a good choice for. But the problem is that you should understand that an aggressive hybrid fund typically holds like 70 to 80% equity, approximately 75. Okay, let's say 70 to 75%. But that's a large amount of equity. I have seen people complaining when the market crashes. They say, "Oh, the aggressive hybrid funds are also crashing as much as the diversified equity fund." Of course, they will crash. Something that is with 75% equity will crash almost as much as 100% equity fund. So, if you do not have the right expectations of risk, you will never be satisfied with anything, and most people will never be satisfied with one fund. They just want to. They're always looking at something. First, they said, "Okay, I will stick to only Nifty." Then they said, "No, let me add a little bit of Nifty next 50." Then Nifty mid cap 150 funds came. No, I will just use only Nifty mid cap 150. Then large Nifty large mid cap 250 came. Then so that's the fund Nifty. Then I'll go to 500. Then came the factor indices, quality factor, low volatility factor, alpha. It will never stop unless you tell yourself. That's the most important point. If you don't have the right behavioral trait, you will not make money, which is why I believe financial literacy cannot be spread. Disease is spread, financial literacy cannot be spread. People should have the right temperament, and most people don't have the right temperament to be financially literate or to be wealthy. If you don't have, you should say inaction is the most important aspect of portfolio management. See, initially, when you're a beginner, there are some things you need to do: emergency fund, life insurance, health insurance. You build a portfolio, you start investing. That's it. After that, it should be inaction. Whatever happens, except for basic portfolio management actions like rebalancing, etc. Other than that, whatever product comes, it should say, I don't want it. I have done. Its inaction is the most important trait that most people don't appreciate. Other than, see, financial services industry, they are determined to confuse us. They will be making newer and newer and newer products every year, every month. If you are going to get swayed because you are following this influencer, that influencer, and oh, can I have 10% of that? Can I have 10% of this? Who is going to suffer? Not that influencer or that company. Your portfolio is going to suffer. So I'm saying keep it simple, but do you have the conviction to define what simplicity is for you? Each person's simplicity is different. They don't need to say, for me, without gold is simple. Some people can say, with gold, 3 assets is simple. Fine. You define your simplicity, but what is more important is you stick to it, because the financial services industry is bound to confuse you. They will create options, more and more options. Take term insurance, for example. In the olden days, when I bought term insurance, there's only one product, term life insurance. You pay until 60 or whatever age, there's nothing else. Now you have return of premium. You can have monthly premium term insurance. You can have increasing cover, decreasing cover. All sorts of complications come in, and the normal Joe is confused. What should I choose? So that's the problem. You should define your simplicity, which is very hard.
Okay. So, thanks for that. Now, should someone have a separate medical corpus if they have good health insurance?
Absolutely. Absolutely. Corpus is for how much ever medical insurance you have, you need a corpus, because see, we are caught between hospitals on one side who want to extract as much money as possible, typically, and the insurers on the other side who don't want to pay, who want to pay as little as possible. So you are caught between these two. And therefore, there will always be situations where there will be difficulty of the full claim not being processed, or the claim itself being rejected, or cashless being rejected. You need money. You need money to fend off. And there are so many procedures which don't come under health insurance. Because what is happening now is, especially for older people, uh, the home treatment has increased a lot. The options for home treatment, home-based treatment, has increased so much that you can't cover that by insurance, most of them. So you need a huge corpus, and so you have to. The one thing I would say is that one of the biggest advantages of keeping your inflation a little bit higher, keeping your return expectations a little bit lower, is that you will push yourself to invest more. If you push yourself to invest more over 15 years, 20 years, hopefully, if luck is on your side, you may end up with a corpus larger than what your target corpus is for retirement. That extra sum can be your buffer for medical expenses, can be your buffer for replacing your equipment. It can be your discretionary fund. You can even use it for traveling, whatever, all that thing. But that's the reason why I'm saying you push it. But you can't factor it now. You can't ask a 25-year-old to add a little bit extra for medical expenses, add a little bit extra for your equipment breakdown. That guy will say, no, I'm going to unsubscribe from you. You are no good. People want motivation, right? So let's motivate them to some extent and say, okay, at least you start with something. Just get started. Do something. But over time, please reflect on your investments and keep changing those assumptions and push yourself to invest more. The single mantra for making wealth is more and more investments pumped into your investments.